Hello, fellow traders. Tis I, the Rumpled One, coming to you on Tuesday, May the 3rd. The year's 2022. Let's talk trading. Risk part two with Walmal. And actually, this is take two. We just got finished the video. I go to hit, to save it, and it says error or problem. You either have to delete and start over or delete and quit. So this video is for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, take two. We get to try this again.
Hopefully it'll be recorded this time, and hopefully we can go and even recount exactly what we said the first time, because I thought the first time was actually pretty good.
Yes, let's see, because I think somehow I got us. I said I was going to take us a little off topic, but you opened. I can't remember what you opened with.
Well, one of the things I was talking about is the whole idea of opportunity and risk, and they kind of go hand in hand. When you want to go and actually have opportunities, and their opportunities are abound. They're everywhere you look. There are lots and lots of opportunity. There's some of the opportunities are small little opportunities. Other opportunities are really nice big opportunities. But the thing is, you need to go and take those opportunities. But the thing is, you can't take opportunities if you don't have the ability, you don't have the tools, or you don't have the money. And actually, money is part of the tools, because I think I said this, in the last video. But money is, it's key to what we use to live on. It's necessary.
Yeah.
They say that money's not everything, but it is in one sense.
Yeah, and that's when I took us off. I said not getting political, but there's a lot of things going on in the world right now with inflation and just the rising prices of gas and food. You've got food shortages in some cases, and I think what I was saying was that if you live in an urban area, you're pretty much dependent upon every somebody for everything. Meaning, you have to exchange money to get what you want. Whereas if you live out in the country on acres or an acre or partial of an acre, you can actually start to become independent. You can grow, some or most of your food. You can supply your own water. You can supply your own power. But you can, work towards being, totally, like they say, off grid or independent of somebody. So money is only used to store value and exchange value. It's a means of exchange. And so when you say, money is everything, that's only because, so many people in this country have moved to the city.
Yeah, you're exactly right. You can go and look at money as I like to go and equate money to sort of like a battery. And you kind of hit on me and said it's a way to store value. That's what it is. It's a way to go and store energy. It's a way to store something so that when an opportunity comes along, you're able to take advantage of it. And it's sort of like you're able to go, and at the same time, if you're in an urban environment, you're able to go and take some of that stored energy and you give it to somebody else who can give you food, or can give you electricity, or can go and put a roof over your head, and you're able to go and live your life, and that's why it's so important. And and I say all the time that what's the most important thing that you do? You need to go and conserve that storage of resources, and you need to go not only conserve it, because as you already went and pointed out, at least here in the United States, we're in a period right now where we're talking about stagflation at best, and that's the idea that the economy is starting to stagnate and not really grow, but at the same time, prices for everything is going up and up and up. Well, the problem with that is, if I got all my money stuffed into, U.S. dollars or greenbacks, well, every day that greenback is worth less money, and because of that, if I could go and buy five loaves of bread today, tomorrow I may only be able to buy 3 loaves of bread. So I need to go and take those resources and make it grow so that tomorrow I can still buy 5 or preferably 6. That way I can go and help out other family members, other loved ones, friends, those around us. And that's kind of what we need to go do in trading as well.
Yeah.
We need to go and grow it.
Yeah. Now I remember you told 2 stories. You told one about when you left the job, and then you told one about the opportunity that your father had.
Yeah.
So you've got about 9 minutes.
Well, in 2008, the United States went into what was called labeled as the Great Recession because it was the worst recession that the United States had ever experienced. It wasn't a depression; didn't meet the technical criteria to be a depression, but it certainly met the criteria to be a recession. So it was called the Great Depression. And what was happening was I was working for a company that I couldn't agree with on a moral, ethical level of some of the things they were doing. So I knew that I needed to leave. But because of the fact that we were in such a bad economy, jobs were hard to come by. I knew if I went and left that job, I was not going to get a job. There was just no question about it. I couldn't work for somebody else because people were just being fired left and right. Now, of course, you can go and get lucky and get a job, but what I did have put in place is I had made sure that financially we could, as a family, could survive a long period of time without having to go and take a job because I had put away what we'd call rainy day funds. I could go and live off of that. In addition to that, I was already, at the point where I was starting to make money going and trading FOREX. And so I said, let's go give it a go. What's the worst thing that's going to happen? I wasn't going to have a job anyway, and I had the capital to do it. So let's go and try it and see what happens. And so that's what I did, and was able to go and, over time, and it took a while, but I actually get it to the point where I'm making much more money than I ever did at any job. But it was the type of thing where we just needed to go and do that.
Yeah, now I remember this is where I think I jumped off and I said, you talked about a rainy day fund, and I said I always have another fund called the opportunity fund. So when an opportunity presents itself, I have that resource money available to take advantage of that opportunity. And I talked about the story when somebody had a practically brand new Sears Craftsman compressor on sale, or were selling it for $250, and I offered him 200. I had the cash, and I got it for 200. And then I think you told that, I think from there is where you told the story, or you reminded me about the opportunity in oil a couple of years ago.
Yeah, 2 years ago, and just about to this day, 2 years ago, because we were in the middle of the start of the pandemic, oil crashed. It was literally trading below zero, and the thing is, I was kicking myself in the head because it was the type of thing where I had the money to invest, but I didn't have the resources. I didn't have all the tools in place because I didn't have a broker where I could buy oil from. And think about this. So we would have gotten into oil at, let's say, $4 or $5 a barrel, and now it's like 100, 110, depending on what day you're looking at it. That's 25 to 1. Let's say you invested 10 grand. Well, that's $2.5 million. That would have been life changing,
Yeah.
But again, it's opportunity. Opportunity equals risk, and and I like to go and say that what opportunity and risk is that opportunity is willing to go and risk as much as you can to the point, or to the extent that you do not go and put yourself and your family and your loved ones in harm. And that's what we need to do. So just go and risk to that point. And if you do that, I think that we as traders can do very, very well, because that means that even if I have a bad day, tomorrow can come and I can go and risk again and not worry about it. But I always have to make sure that what I'm risking is something that's reasonable, and making sure that I have some type of guardrails around me to keep me safe.
Yeah, now I think that's when you told the story about your dad.
Yeah, and so I'll make this short because I know we have much less time this time. But
You got about 5 minutes.
Oh, okay.
or 4 minutes.
Back
Yeah.
so back in the 1960s, my father was a college professor, and back in those days, college professors they were esteemed. They were people that people looked up to, and bent the knee to, so to speak. Because they were the learned and everything else. But the thing is, they didn't get paid very much. And especially for us, we're a family where I have 7 brothers and sisters, and in addition to that, we had grandparents living with us, all in a 3-bedroom house. So it was pretty tight accommodations. But we got by, no qualms about that. But my father had an opportunity come across, and the opportunity was that the government came in and said, "We want to put a road right where your house is right now." Oh, okay. So my father went and took the house our family house that we were living in, and he sold the house and the land to the government for a good chunk of change. And then what he did was he bought the house back from the government at auction and got the house back for $1. Okay, because for whatever reason, I don't know why, but for whatever reason, he was the only one that showed up for the auction. So and apparently that was how things were done in the States for a long period of time. If they wanted to put a road through, they had silent auctions that nobody knew about, and that's how they would convince people to sell the houses off. Well, he wound up with a big chunk of change. Now, my dad had learned how to trade in the stock market many years before that, but because not having the funding, he was able to make, maybe a couple $100 a year. That's really all he could do, because he was playing penny stocks, and he was only playing, a minimum shares on it. But now he had all the opportunity there, because now he had the funding that he could go and do it with, and in addition to that, he also had the tools or the resources of knowing how to do it. You have to have all those things come together. And I think you asked the question, Tiro. So what was the risk for him?
Right.
Well, the risk for him was the reality was that at that time in the United States, property values were starting to explode. People were moving out of the big cities and into suburbia and into rural areas. And so the risk was he could have actually sold that house. And what if the auction fell through? Then next thing you know, he's got to go and buy the house on the spot market. And now he's got a family of 7 kids, a wife, grandparents, and no place to live. That's a huge risk. He would have a big chunk of change, so he would have to go and pay rent, until he was able to find a place. So that was the risk he took by doing all this. It's not a terrible risk, but isn't that the point? You take a risk, but you don't take a risk that puts you into the poorhouse. You take a risk that's got the ability that can reward you.
Yeah, I know. I was thinking, the thing about oil and a few other things like, cryptocurrencies. One of the things that I learned to do was through life experience was to focus. Because one time I drew a little chart on a piece of paper, and I realized I was involved in 13 different things at once, and it's just like that's too many balls in the air. So I cut it back to where it's 4. Because
Right.
you have to everybody has their personal things they have to do. You have to have some income generating activities. You've got your chores and things like that, and then there's usually something you do for fun or whatever, a hobby or something. So
Yeah.
that's one of the reasons why I didn't get involved in some of the things that I wind up kicking myself for, because it's like, nope, I got to stay focused on doing what I'm doing, because I'm not going to go back to having 13 things going on. I forget I had like 3 or 4 businesses going. It was nuts. But anyway, the fastest 15 minutes in trading is just about up. So Walmal, I remember you gave him a quick tech takeaway. You got about 15 seconds.
I don't remember how I worded it. I wish I did. But basically, what I'm going to say is that you risk what you can risk so that you don't hurt yourself, and at the same time, leave room so that you can go and grow and prosper.
Exactly. So, fellow traders, just remember when you're sitting down at your terminal, and you put a trade on, that's risk. And it's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumple One, over and out.